thanks to Brian for inviting us again to join the panel. I think he gives great advice in terms of how to approach investments. He also gave a presentation during Toronto, MIF in Toronto, which broke down a number of things to look at when you're investing in the sector. And I'd encourage anyone in the audience to reach out to get that presentation as well. I thought it was extremely well done. I'd encourage you to talk to him about Newcore, as well as come to our booth, and we can go into detail, as well as Chen Lin follows Newcore on the newsletter side of things as well. So I'd encourage anyone who knows Chen or Brian to find out why they're so keen on the company. In terms of Newcore, I guess first thing I'll say is I will be making some forward-looking statements. So as Simon highlighted, go to the website and have a look at those. Newcore has a district-scale exploration project in Ghana, the Enchi project. It's an advanced stage project, has a economic study on it, a PEA with very robust economics. We also have a 1.4 million ounce resource. Management is aligned with shareholders through our 24% ownership in the business, so we ultimately think as shareholders first. We are very well supported by the capital markets, 5 investment banks currently covering us, as well as very strong institutional ownership, 40% to date. They all see the district scale upside of our project, as well as the fundamental underpinning of our project. If you're buying Newcore today, you're buying it at levels we haven't seen in 2 years, and I'll go through a number of the things we've accomplished over that period. But in terms of metrics, we're trading right now at about $15 per ounce in the ground, and we're trading at about 0.1 times NPV. So again, encourage you to talk to Brian about those types of metrics, and he can give you his views. Ghana is a tier 1 jurisdiction to be operating in. As I always say, don't listen to me, but look at the major mining companies with significant operations in Ghana. So very good place to be operating. You would not be able to get a district scale project like ours today. We're fortunate to have amassed this over a 10-year period. 2 prolific gold belts in Ghana, the Ashanti Belt and then the Sefwi-Bibiani Belt. 200 million ounces historically discovered in Ghana. We sit on the Sefwi-Bibiani Belt. Great neighbors along trend from us. This is true elephant country from that perspective. We recently completed a 90,000 meter drill program. This is the largest ever drill program on this project, and we really had 4 key goals we wanted to accomplish. We wanted to expand existing resource at all of our known resource areas. We wanted to go back to previously drill tested areas, do follow-up drilling. We also wanted to make some new discoveries, made 3 new discoveries as part of this drill program. And then we also wanted to test the higher grade at depth. So we've accomplished all of that with our 90,000 meter drill program. And we're actually just in the process of launching a phase 2 drill program, which is kicking off as we speak. And you'll see that we announced that this past week. Here's our project. As I mentioned, 216 square kilometers, 25 targets. We've only drilled on 9 of them to date, and 4 of them make up our current resource. In terms of expansion along strike was one of the things we wanted to accomplish. I think Boyne's a great example of that. Boyne sits at about 500,000 ounces. It's a currently 2.8 kilometer pit constrained resource. You can see the gray shapes there. Those are the pits. And as you can see, we've extended mineralization both to the north and to the south by about 1.4 kilometers. So pretty easy to do the math on an existing 2.8, add 1.4 to that, what that might do in terms of expanding the resource. We don't have time to go into it, but if I took you through the 3D models of our other 3 key deposits, very similar. Along strike, you can see that we've added meaningful mineralization. Second thing we wanted to accomplish is we wanted to start testing the high grade at depth for the first time ever. What you're looking at here is a long section of our Enchi project. We've superimposed the oxides. So this is a heap leach project, as Brian mentioned. Much lower capex, and that's one of the big advantages of this project. So 85% of our current resource is within the oxide transitional zone, and 63 meters from surface are the average depths of the pits that capture that material. You then compare that to Kinross's Toronto mine. You put the same depth of oxidization there, and it's pretty clear to see, these greenstone hosted deposits really grow in size as you start to drill deeper. For the first time ever, we've started to drill below 125 meters as part of this 90,000 meter program. I'll take you to NIAM, which I think is a good example of some of the high grade that we found on our project. We're now looking at a long section here, and if I just zoom in ever so slightly, as we started to drill deeper, down to 150 meters, we've hit 5.8 over 7 meters, 5.7 over 8, 5.4 over 9, 5 grams over 8 meters. So we think we've tapped into one of these high-grade feeder zones that extends at depth. Sitting 500 meters to the south in this other area over here, 3.2 over 9, 7.4 over almost 8 grams, 3.5 over 9, 6 over 6. So again, we think we've hit another one of these high-grade plunging zones that looks very similar to what you see at Chirano, Bibiani, Newmont's Ahafo mine. This includes all of the holes ever drilled here. So we're still only down at about 250, 300 meters vertically below surface, and lots of opportunity for us to follow up on these areas where there's no drilling done yet and look to extend that high-grade mineralization right through that entire area. Third thing we wanted to accomplish, make some new discoveries, really highlight the district scale opportunity here. Again, going back to our project, these new discoveries all sit right around our main deposit, which is the Sium deposit, which sits at 725,000 ounces. When you look here, this is the Sium deposit that makes up that 725,000 ounces. New discovery at Sium South, new discovery at Tokasea, and a new discovery at the parallel structure. When you start to look at the number of holes drilled here, we've drilled about 100 holes. Sium, we've probably drilled about 350 holes to date, so lots of opportunity for us to continue to grow that oxide transitional zone. If we look at the resource, we've got a current 1.4 million ounce resource. You look at all the historical drilling that feeds that resource, you're looking at about 110,000 meters. As Brian highlighted, we have about 70,000 meters that has not been included in this resource or the economic study we put out last year. You look at the true expansion drilling, which will feed an updated resource. It's about 40 of our 70,000 meters. So we see our resource starting to move towards 2 million ounces. So that's just kind of a back of the envelope calculation. We also always like to highlight grade. We're sitting at 0.62 grams per ton. You compare that to most heap leach projects globally, and you're typically looking at about 0.3 to 0.5. So one of the things that really helps drive the economics is the grade as well. In terms of the team and looking at the valuation, as I highlighted, management insiders truly aligned through our 24% ownership in the business, really strong institutional support, 40% owned. These are deep-pocketed, precious metals, mining-focused investors, great support from the capital markets. If you have relationships with any of these groups, I'd encourage you to speak to their analysts or get the research, and a really good capital structure. 138 million shares outstanding. We've never had to entice investors with warrants, so a nice clean capital structure. And crucially, we have $6.5 million. So we're going to be able to continue to move this project forward, given all the success we've had. We've got a 30-page presentation on our website, which goes into a lot of detail on the economic study that we put out. But at a high level, $1,650 gold, you're looking at an after-tax NPV of $212 million US. That compares to a stock price today of about 20, so trading at about 0.1 times NPV. If you wanted to bump that up to 1850, you're looking at 300 million after-tax NPV. Since we were last trading at these levels, we've brought 5 investment banks on to cover the stock. We've taken our ownership from 0 to 40% institutionally owned. Management insiders truly aligned. We've been writing checks alongside investors on all of the financings since I joined 2 years ago. We've raised $34.5 million. So one way of looking at it is all the money that we've put into the company over the last 2 years, we're currently trading at that value today. So in some ways, you're getting the company for free. And then in terms of the PEA, very robust economics, and that's one of the key differentiators. There's a fundamental underpinning of value with Newcore that you don't necessarily get with companies who only put out splashy drill results. 90,000 meters completed so far. The other thing, I'll just take a second, and I think this relates to Simon's project as well, and conscious I'm going over time, but anyone who wants to leave, they can, but I think this is an important point. Heap leach projects, I think, are one of the key benefits to Newcore. If you look at a heap leach project, much lower CapEx to bring it into production. In the last six months, we've seen CapEx blowouts across the sector, doubling, tripling of CapEx. The nice thing about a heap leach project is our economics, $100 million gives you an NPV of $300 million. So a 3-to-1 NPV to CapEx ratio. And happy to talk about it at the booth if anyone wants to get in more detail. But the capital intensity to produce 100,000 ounces is one of the key things for a heap leach project. Whether it's Simon's project or our project, I think the market is going to start to refocus on these types of projects instead of these large CapEx projects that companies are blowing themselves up with. There's a scenario with Newcore where we could bring 25 to 50,000 ounces of production online. Because we've got good infrastructure and because it's a heap leach project and you can scale these projects up, again, Simon's project would have good infrastructure as well and can leverage that. There's also a scenario where a mid-cat could come along and say, okay, we see clear path to 100,000 ounces of production, and then from there we can scale it up to 150 to 200. What we've been focusing on is the district scale opportunity, aggressively exploring, go from 1.4 to 2 and eventually to 3 to 5 million ounces. At that stage, you've got potential majors who would be interested in the company. But as we move towards that, there's a number of different scenarios that we can look at, whether it's 25 to 50,000 ounces of production, whether it's a mid-cap coming in and taking it out. So the flexibility of a heap leach project, the low capital intensity, I think is one of the real differentiators that investors should look at. Happy to chat with anyone at the booth about that. I'd also, again, encourage you to chat with Brian or Chen and get their views as opposed to just mine. Thanks for letting me ramble on for a few extra moments, and I think it's probably a benefit for Simon as well, given some of the oxides that those guys have. So thanks a lot.